results to be published, which just has happened. So now we can start the interaction. The August press conference is always very tight because we have to fit in the AGM after the press conference before the analyst meet. So we have hard stop at 2:30. As we normally do, I would just give a very brief overview, and then Partha will take you through a presentation giving you both operational as well as financial performance. And then we will have Q&A. So basically, the headline in terms of financial performance is that we had a 14% growth in revenue and a 16% growth in PAT this year. Partha will take you through all the details. And this is in spite of, as you know, not having the Haridwar benefit this quarter as we did last year, first quarter. If I just go very quickly and very briefly through the various segments, industry performance, and then we'll come back and talk in more detail. Automotive, as you know, has grown about 9% in the quarter overall, and Mahindra has also grown at about the same pace. In tractor, the industry has grown extremely well, as we had expected because of monsoon. In fact, somewhat better than what we had thought it would be. And Mahindra has performed even better within the industry in terms of our market share growth. Partha will give you more detail. In the truck industry, the growth has been pretty much what we had expected at about 17-18%, which is lower than what it was last year. And as we had said that we cannot have that kind of growth again this year. And again, we have performed significantly better than the industry within that. So I'll just stop here, let Partha do a detailed presentation, and after that we will do a Q&A discussion.
Am I audible? Yeah, it's a mic on. Yeah. Thank you, and welcome to Q1 press meet. Q1 F 2017 was challenging and very interesting in many respects. Not least of them because we have gone through and we are going through a new era called Ind AS. But first, just to kind of start with a few highlights and a few scene setting what happened when we went to the analyst meet this time. We talk about that there is going to be many challenges and opportunities in F17. The global monsoon is one of them, and the 7th Pay Commission and the benefits were the other. Brexit we thought will be a challenge, but the impact is already start to be seen now. That's an event which has happened. The sunset of the fiscal benefit which Pawan talked about was another one. Just to give, this was about 100 to 150 basis point impact to the bottom line. And new launches will on the other hand have a positive impact in terms of volumes, but a sobering impact on the margin. So that was another thing. And food inflation was there to kind of see. So, but we on the other hand internally had a complete product portfolio, and we are prepared with in terms of having a full year of the launch. GST is an opportunity whose time has come. So if you look at the economic scenario, by and large things were okay. The one thing which continues to be under pressure is IIP, but hopefully as we go forward that also should come into the green zone. Now let's talk about the automotive sector. This quarter was good in terms of the volume growth. Our utility vehicles saw 13% growth. Our LCV, less than 2 tons, saw 45% growth, and HCV, the higher end segments, saw a 48% growth. Overall, a 10% growth. When you compare with the industry, you saw that in the PV, which is the bottom end of the chart, but you know in the chart you can see that we grew by about roughly 12%, 11% in terms of volume growth in the PV segment, which is the highest amongst all the players, top 5 players in the industry. So it's been a very good quarter from a PV point of view. We have done well in terms of volume growth, but though the industry grew a little faster in UV, and in the LCV and the segment down below, which is the passenger goods and the HCV goods, you can see that we have outperformed the market. So overall, a very volume-focused quarter in auto. In exports, we grew handsomely, 25% overall growth, and growth, as you can see, in all the states, SNB, Africa, South Africa, all of them grew handsomely. But the one which had a very 150% growth is Australia, which stands out in terms of percentage. We also went into some new market, the launch of XUV 500 in East Africa, the launch of KUV 100 in South Africa and Nepal, and also the launch of XUV 500 again in Australia. All of them had been received very well in their respective market. Going to farm equipment sector, again, as Pawan just alluded, this quarter, a 43.9% market share is one of the highest that has been achieved by us. It is the highest ever market share for any quarter since 2007. So it's a highlight for us. The two good news here is the market is growing and we are growing higher than the market. In terms of export performance, overall the export is a little subdued in tractor. But if you see two areas, which is SNBB, which is the neighboring countries, 94% positive growth, and Africa, 150% positive growth. So both areas have done really well. We have got some new market opened in Africa. After quite some time of flux, there is positive momentum. So very good overall. Musa, our USA, has come down, but that is not a reflection of Mahindra USA's performance, which continues to grow. It is our stock correction and our sending of tractors from here, which is reduced. Some highlights, we've had very good feedback from all of you. Our investors has rated us as in the top two, and M&M ranks second in the best investor relations program. And also Transparency International has rated us among the top three in the list of 100 emerging market multinationals. So that's something that we are reasonably proud of. Coming to financial, I just wanted to mention again, this is Ind AS, and we are covered under Ind AS from 1st April, so this quarter result will be under the new regime. And there is one thing though which we're going to continue to present as in the old. So for you the change will not be dramatic. Excise duty is to be grossed up and we present a gross revenue, which we will present. However, for sake of continuity and comparability, we will show all ratios and growth at net revenue also. So you will not see major change from that point of view. All the other figures has Ind AS adjustments, though for M&M, I must hasten to add that the difference between Ind AS figures and the erstwhile regime figures is not material in profit terms. Okay? So overall, so that's just to say, on the top line you will see a 900 crore improvement, but if you look at Q1 of last year, at the bottom line of PAT, there's only a difference of 1 crore. Okay? A quarterly performance, on the top line, the volumes of FES grew around 20% and auto grew at 11%. In terms of net revenue, our overall net revenue went up by 11.4%, EBITDA by 10.7% at 1,489 crores. OPM was similar to last year at 14.1%, and PAT before EI grew by 5%. But PAT, after, as it's the new terminology, is PAT from operating activities or normal activities or ordinary activities, is a growth of 16%. There is a transfer of investment of agribusiness from M&M to a company called MASL, which will now house all the agri-businesses. We talked about this before and that's happened in this quarter. So that gives a profit of 91 crores overall. PAT at 962 crores, 16% growth. A revenue at 10,525 crores, a growth of 12%. Segment result, auto sector, top line grew at 9.7% to a revenue of 6,492 crores. and segment profits at 505 crores reflects the impact of Haridwar benefit, which has gone away, one-time benefit, and also the higher depreciation due to new products. 1,077 crores is a growth of 15%. The segment profits grows at a much higher pace at 22.5%, which is 768.
There you have it, some key comments coming in from the management of M&M. Let's cut right back.
High that we have achieved is a high in 6-year time frame kind of a thing. So one of the best quarters for farm equipment sector from a margin perspective. In terms of key listed company, TML had a profit of 750 crores, up from 627 crores last year, a huge growth. MFSL had similar profits as last year, so did MLDL, and a growth in MHRIL. So overall, all the listed companies posted good profits. With that, I will stop now, and Pawan.
So we'll go to Q&A.
Have you regrouped the PGS figures for India or still IGAP? Are you comparing it with? And can you give us pro forma or how the performance has been based on India's comparison?
Yeah. Okay. So the question I'm just repeating so that everyone can get it. So is that saying, is the previous year's figures regrouped to properly reflect? I must tell you that SEBI did give some exemptions. It said you can get away with only giving this year's figures, and you can have more time to give last year's figures. M&M, having been already prepared, did not need any of those exemptions. So we have done all the 4 quarters figures we have given, all the 4 periods. So last year's figures are all grouped in line with the same index as this time. So, and all comparison that I've given are apple to apple. So everything that you see, there is no regrouping you need to worry about. All of them have been done. Yeah. So I explained to you last year, on an 8 crore is the difference in EBITDA. If you see, I had given that sheet. So 8 crore doesn't move. It is 14.1, maybe 14 point, same thing. So if you see EBITDA, the difference is only 8 crores in the previous year. This is Q1 of last year. So it only moves by, it goes up 8 crores last year as compared to previous. So it's not changing EBITDA margin at all. Yeah.
But it's still, for whatever it's worth, the comparison that you have given is like to like.
Like to like. Both last year changed to new Ind AS, and this year in Ind AS, so everything is comparable.
So all that this is showing is that last year, when you would have given IGAP, you would have given 1353. That 1353 has now become 1345. And when we are comparing last year to this year, we are comparing 1345 to this year. It's about the same. It's 14.2 and 14.1.
Yeah. We had shared that before. It is 14.2%
This is comparing last year to
year.
last year. This is not last year to this year.
What it is showing there in the chart is, first is, last year I had shown you when I presented last year same time, that the EBITDA is 1353.
On a 9437 revenue.
Yeah. So what, the EBITDA only changes by 8 crores even if I apply Ind AS. Just telling you that for us the implication is very small for Ind AS.
Yeah, I think where he is coming from is the top line has become 10,368.
Yeah.
That is because now it's a gross revenue.
Yeah.
So excise is added to that under IGAP, under Ind AS, and that's the reason excise. So if you were to compare profit margin under Ind AS, taking gross revenue as the revenue, then for everybody, not just for Mahindra, for everybody, there will be reduction in margin. So you have to recalibrate yourself that what was a 14% OPM last year may become a 13% OPM this year.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.